When we are truly honest to ourselves, then investing is actually not a matter of doing the perfect rational decision. It's much more an expression of one's personality. So when I look around, right, in my circle of friends, when I look around in the community of this channel, when I look in the comments, I see that very often people have an inclination towards a certain type of investing. They have an inclination towards a certain type of asset, and then they start rationalizing why that asset is actually the best to invest in, why that asset makes sense to own most. And that leads to all kinds of problems. So for example, right, probably the most people that watch this channel are somewhat of a Bitcoin maximalist, right? They might own even the majority of wealth in Bitcoin, and they simply regard Bitcoin as the hardest of the assets. And they simply buy this with a ride and die mentality. Even if it drops by 70 or 80% versus the US dollar, that's fine. It's simply just because Bitcoin is early in its adoption curve, and at some point central banks will hoard it, etc. So I'm simply just buying and holding it no matter what, right? I'm the Bitcoin maximalist. So that's one kind of investing, and obviously that has a problem due to the massive volatility, right? If you've got a lot of money in Bitcoin, if your majority of wealth is in Bitcoin, and say you already have, say, 4 or 5 years of income saved up, and it's all in Bitcoin, and then that drops by 70 or 80%, suddenly, at least temporarily, you're down by those 3-4 years of income. So that's pretty bad, right? You can't really properly sleep when you see that much of volatility. At least most people can't. So that's a problem. Then you've got the other type of investor that's probably also relatively prevalent on this channel, and that's the altcoin gambler, right? It's the one that buys a lot of meme coins that hopes to get the 10 or 100x return, and that then potentially might destroy the entire wealth because it's not properly risk adjusted. So that's another issue. Now there's also all kinds of other personalities, right? There's, for example, the cash hoarder, right? The person that doesn't like volatility whatsoever. They want to play it safe. But that has another issue, right? When you keep it safe, when you've got all your money in cash, you don't invest this whatsoever. I've got a few friends that are like this, right? They have 5 years of expenses just stashed away in fiat cash in their bank account. When you're doing this for long enough and you're saving for long enough, in the end, your purchasing power won't even go up anymore, even though you're saving that much, because there's simply monetary expansion, right? The money supply grows by 6.8% per annum in the US. And so if you've got 5 years saved up and it's all in cash and you're losing 6.8% per annum on that, right? Then it's 5 times, let's say 7%. It's 35% of your annual income that suddenly gets eroded through inflation. So you might have a savings rate of 35%, but you're not getting ahead whatsoever because you're simply losing so much purchasing power with your cash. So hoarding cash has another problem. What about the gold bugs of this world? There's an entire community behind Peter Schiff, right, who's probably spearheading this whole movement. The people that dollar cost average into gold, they might also not have the best time because gold tends to underperform all kinds of other assets. Because again, the monetary supply expands, but the gold supply expands as well. Not as quickly as monetary supply, but still it expands. And so in the end, you might be okay over the decades, right? If you hold over, say, 30, 40 years, you might be okay with preserving your purchasing power measured in consumer goods, but you might still not keep up with, say, cost of education or cost of healthcare or cost of property, right? Let's say you want to upgrade your house after 10, 20 years. If you save in gold, you might also fall behind. And so speaking of property, there's obviously also people that go all in on property, right? The Stephen Grahams of this world. And you can make this work, right? The nice thing about property compared to all other asset classes is that you tend to be able to lever this up more, right? You can have years and years of your income in debt if you're okay with buying property. You cannot have that much debt if you want to buy Bitcoin with that, or if you want to buy stocks with that. But when you buy property, you can. And the beauty of property is also that it's relatively non-fungible, right? One house is not the same as another house. and you need to have some skill in order to price this properly. In other words, if you are, say, a property agent, and if you are, say, a quant, and you know your local market very well, then you might be able to actually decipher what kind of houses are actually cheap relative to the market value. And you might be able to buy things very low. If you then couple this with massive leverage, then you can, of course, make a lot of money as well. But on the other hand, right, if you're simply just your average Joe that buys a house, you're very unlikely going to become rich with property. But again, right, there is also a way to wealth with property. And so if you know what you're doing, this might be the correct path. The country where I am originally from seems to be now a country of ETF savers. So there are a lot of financial channels on YouTube that talk about saving in index ETFs. And in general, that does make sense, right? If you're buying, say, S&P 500 low-cost ETFs, that might make sense. But if you're then starting to diversify even more, right? You buy the entire world, then also you tend to be underperforming just US monetary expansion. So simply just by diversifying everywhere, you're actually not getting better. You do have to put your bets somewhere because returns tend to be concentrated, right? It's a winner-take-most market. Every market is like this. Whenever you are among the top performers, you tend to accrue most of the benefits. And if you just look at this globally, most of the capital is flowing still to the US. The US stock market tends to outperform pretty much any other stock market in the world. And so if you then tend to diversify too much across the globe, you're not doing that well. But still, right, saving in ETFs over the long term tends to still be better, at least, than just hoarding cash. Now, there's one more type of investor, and many people that watch here might not even be aware of that type of investor. And that's the 60-40 investor. The investor that has 60% of their money in stocks and 40% of their money in bonds. So the boomer generation got that kind of advice, right? They got the advice that stocks and bonds aren't that massively correlated. And so the older you get, the more bonds you should be having. But just as a general rule of thumb, having 60% in stocks versus 40% in bonds seems to be a good recipe. Unfortunately, though, in the last 10 to 20 years, it was a recipe for disaster. It tended to underperform pretty much anything else, right? If you didn't have that many bonds, you would have been fine.
This needs to go to 1 million or March buyers now will make millions. This is how you get the clicks on YouTube, but this is not how you beat the market. To beat the market in crypto, you need to be better informed than the rest. You need to be better skilled than the rest. You need to do better blockchain analytics. You need to track other people's wallets and know what is the smart money doing. It's the boring educational content that forms skill that doesn't perform so well on YouTube though. That's why I created the premium membership. Feel free to check it out. We are tracking influencer wallets to find out what they are buying before promoting this on YouTube. We've got a lot of tutorials to help with on-chain analytics, to help with wallet discovery. And of course, there are also plenty of chats where we help each other and also one-on-one conversations with me. So I'm messaging every premium member one-on-one directly. Once you're joining, you will get a message from me and you have the opportunity to directly pick my brain. Feel free to check it out. TheBitcoinTrader.com link is down below.
Now, here's the thing. The problem is that what I've just described is not just different strategies. These are really personalities, as in people get super hyper focused on their market. And if you want to beat the market, that might make sense. In other words, if you look at crypto 5-6 hours per day and you try to find the right altcoin, it does make sense to focus on crypto. Or if you are, say, an agent for property, it does make sense to have the majority of wealth in property. However, if you simply just want to get average performances across markets, you simply just want to preserve your purchasing power, slowly grow it over time, then I still believe it does make sense to be diversified, to actually not have a strong opinion on any asset class, to potentially, even if you're a Bitcoin maximalist and you hate the government, or even you're a gold buck and you do not like the monetary expansion, to still consider, is there potentially a scenario where at some point in time, long-term government bonds might make sense for you, right? This is like completely out of the regular thinking. If you're completely into Bitcoin, maybe it does make sense. Or maybe sometimes it might make sense to buy property, even though you think that the state might seize the property or might tax it really high, maybe at some price point, it might still be attractive. For example, with bonds, right? Bonds are inversely correlated to interest rate expectations. So if the market thinks that interest rates are going to come down, then bond prices, long-term government bond prices with a lot of interest rate flexibility or interest rate risk, they go up and vice versa. Right? When interest rates go up, then the prices of long-term government bonds go down. Now the market starts to now believe that interest rates go down. And so since April of this year, long-term government bonds went up. And so this is a pretty hard sale, right? For the Bitcoin Strategy channel, for the people in my premium, to then tell them I bought heavily into long-term government bonds. They think, are you out of your mind, right? To suddenly buy something that's issued by the government, by something that's also inflating a lot, something that tends to be bad over time. But at some point in time, right, in some certain scenarios, temporarily, it might make sense. It might make sense not to be the Bitcoin maximalist that endures 70% crashes. If we see that long-term holders, long-term whales of Bitcoin suddenly sell, and when we see that the value days destroyed metric, right, the VDD metric, suddenly peaks, when those diamond hands suddenly move their Bitcoin, maybe it makes sense to listen, right? Maybe it makes sense to take some chips off the table, especially when you're currently overexposed after a massive bull run. So those are the kinds of things I believe are super important. It's important not to be too hyper-focused on your investment personality. It's much more important to try to still analyze at what point in time could another asset class still be interesting. And what I personally do is I own pretty much all of the asset classes, and I simply just balance things differently depending on where I currently see the markets. So for example, when Bitcoin has risen by 3-4x and when I see the value that is destroyed metric going up, then I tend to sell. When I see that interest rates are very high and potentially they might come down again, then I might buy more long-term government bonds, etc. Right? When I see, say, the Shiller PE ratio being super low in stocks, maybe I go more into stocks. Right? There's all kinds of different ways to look at this. For the housing market, one could look, for example, at housing affordability. How expensive are houses now relative to how much you have to pay for the mortgage? Now, those kind of things, right? We all have different ways to potentially measure the prices of things. But if you're too much honed into one single thing, then you take on so much risk that's not really necessary. You can achieve the same kinds of returns without going down by 60-70% temporarily. It does make sense, in my opinion, to have a balanced portfolio and to not be too heavily into one thing. I know this sounds super boring, right? Because when you're super focused on one single asset class, you always have a nice story, right? When you're just selling gold, like Peter Schiff, then you can simply just always bash the government. You can say the government is going to destroy the economy. And you talk about this for 30, 40 years. Gold over those decades underperformed stocks. And so you still have a nice crowd behind you. You still have a nice community behind you. But did you actually really serve that community with best advice? I don't think so. I think it's much better to be flexible. Be flexible to how the prices are, because there's a fair price to everything. Even though there might be the risk that when you're buying stocks or when you're buying property, that suddenly the tax rates go up and that you suddenly have to pay higher tax. Even though that might be true, if the price is low enough, you can still calculate that in, right? There is always a fair price for everything, even if you've got all these additional risks on top of this. It's the same for Bitcoin, right? Bitcoin isn't 100% risk-free either. Yes, we do have a bit of a blessing now because we've got the Bitcoin ETF. It's unlikely that it's going to get outlawed anytime soon. 5 years ago, this looked very different, by the way. So yes, Bitcoin is a bit safer, but who knows what happens in real time of crisis? Let's say we see another global financial crisis. We've never seen a crisis like this during Bitcoin's entire existence. Let's say we see a complete collapse. What happens then, right? When stocks really go down by 70, 80%, like during the Great Depression of the 1930s. What happens then with law around Bitcoin? Nobody knows, right? Gold used to get confiscated. Who knows what happens with the Bitcoin ETF? Who knows what laws will be passed around self-custody of Bitcoin during such extreme crises? Nobody knows. And so I believe it makes sense to still diversify across different things, right? Diversify potentially across different countries if you're holding property, diversify across different asset classes, have still opinions on the market, as in when something is super cheap, over allocate towards that, and when something is very expensive, take some chips off the table, still adjust the weightings, but don't be too hyper focused on just a single thing if you don't try to outperform that market specifically, right? If you simply just want to have a nicely allocated portfolio and you simply just want to grow this over time, don't have too strong of an opinion on anything, because at some point in time, things might always be too hot or too cold. And I believe it's the most rational thing to just take advantage of those extreme prices. If you haven't yet joined our Telegram, feel free to do so. The link is down below. Looking very much forward to chatting with you. A like would be, of course, very much appreciated as well. And of course, if you haven't yet subscribed, which I don't believe, but in case you haven't yet subscribed, feel free to do so as well. See you next time. Cheers.